So you're told to invest in the stock market, but should you pick a company that reinvests every penny or one that actually pays you? As a chartered accountant, I'm breaking down one of the most misunderstood concepts in investing, the difference between growth and dividend stocks, and which one is actually better for building wealth. Stick with me because the answer depends on your goals, the company's stage, and how they use their profits. So growth stocks are companies that are focused on expanding. They're reinvesting profits back into the business, not handing out dividends. Think Apple, Microsoft, Nvidia, or Tesla. They spend billions on research and development, acquiring startups, hiring top talent, and expanding into new markets. Why? Because the return on capital is so high, they believe keeping the money inside the business generates more wealth than giving it to shareholders. And they are often right. For example, if a company can reinvest at 20% return annually, that's far better than giving you a 3% dividend. And shareholders benefit not through income but through capital appreciation. The stock price grows as earnings and revenue grow. So the bottom line is, growth stocks typically don't pay much, if any, dividends, but they are aiming for bigger total returns. Now, dividend stocks are the opposite. These are typically mature, stable companies that don't need to plow every penny back into growth. Think Coca-Cola, McDonald's, Johnson & Johnson. These companies have predictable revenues, strong cash flows, and limited room to expand rapidly. So instead, they reward shareholders with regular dividend payments. Here's the cool part. Coca-Cola has increased its dividend every single year for over 60 years. That's what a dividend king is. Even if the share price moves slowly, you're getting paid consistently just for holding the stock. This makes dividend stocks attractive for income investors, retirees, or people who just want cash flow without selling shares. Here's where many people get confused. They assume all profitable companies should pay dividends, but that's not always smart, and it all comes down to the business stage. Early stage or high growth companies need cash to scale. Giving it away as dividends would stunt their own growth. Mature companies, on the other hand, might not have high return reinvestment opportunities left, so giving excess cash to shareholders is more efficient. Think of it like this. Startups equals growth at all costs. Mid-stage companies reinvest strategically. Mature giants reward shareholders. The best companies are honest about where they are on this spectrum and align their strategy accordingly. So which should you invest in? The growth stocks, these are best for long-term investors looking for capital appreciation. They're usually more volatile and they require patience and often no cash flow until you sell. For dividend stocks, these are best for income-focused investors. They have lower volatility and they can generate consistent returns, especially when reinvested via a DRIP, which is a dividend reinvestment plan. But here's the powerful truth. You don't have to choose. Many smart investors hold both, blending growth and income to match their financial goals and risk tolerance. For example, younger investors might lean towards growth. Someone approaching retirement might tilt towards dividends. Let's bring this to life with a practical example. Imagine you invest £10,000 in a growth stock like Nvidia, which grows 20% annually for 10 years. Your investment becomes £61,000 roughly. Now imagine you invest the same amount in a dividend stock like Coca-Cola, which gives 6% per year, but pays 3% in dividends, depending on compounding and market conditions. But here's the difference. With Nvidia, your returns are locked inside the stock until you sell. With Coca-Cola, you've been getting paid the whole way, which can help in recessions or if you want to live off your portfolio. It's about knowing your strategy. So which one suits you better? Getting paid now or growing big later? Let me know in the comments which strategy you're going for, or if you blend both. And don't forget to like and subscribe if you found this useful. I post weekly videos on building wealth the smart way.